All right, good morning, everybody. So we're back at it again. Europe didn't do too bad, really. The FTSE 100's up around 0.25%. A little bit of strength in commodities and mining. The Euro SOX 50 did better, up 0.5%. It's more of the industrial sort of technology rebound. They don't have like a NASDAQ style index like we do. But if we was looking for any sort of technology, that's kind of where we'd find it. Banks, early buying in the week. So we're getting help, at least in that front. Hong Kong up 1/4, Japan closer to 1/2. The markets are okay, right? They're stable, holding into this Jackson Hole symposium. We're going to get Fed speakers chipping their teeth again today. A lot of talk about Bissett's Treasury twist, which is a lot like Operation Twist. I posted a little bit of that in the chat. I'll probably go deeper into it. And it's kind of cool. I had AI make up a little animation of what that would look like so we could visualize what the old operation looked like. So you continue to want to keep your eye on the Fed watch, see what they're doing with the curve, if they're unwinding a hike or pricing in a hike, if they're pulling it forward from December. We know that these Fed speakers that we're getting, they're not announcing policy shifts or anything like that. They're just talking out of the side of their neck, really just trying to run down the clock into the next meeting without really saying anything. So that's kind of the card trick, right? To have a meeting, get up and talk without really saying anything meaningful or noteworthy, and repeat the same message that has been repeated, right? Singing from the hymn book, nothing new, nothing out of line. That's their goal, which of course, most of the time they pull off. Oddly enough, over the years, they've screwed that up badly. End up saying something they didn't mean to say, or they're taken out of context. So, whenever they're speaking, you do want to be mindful. It's like a NASCAR race, right? You go to the races expecting there's going to be a crash. You watch the Fed speakers do these interviews and these events, kind of expecting that they're going to crash. Barkin's going to speak at 8:30 and at 4. And it's possible that they might catch Bissett walking around somewhere and get him talking. I noticed he's been on like cable news and stuff like that, and it's not showing up in our list here in the morning. We do have an auction today at 1 o'clock. It's in the front end. Normally, a 2-year is not something I pay too much attention to, but right now, I would pay attention to this. So watch the clock today, 1 o'clock. We got this auction, and I don't care that it shows a low impact history. Most of these auctions show a low impact history, and yet when it matters, they move the markets. So just watch the clock today, right? Especially with everybody on hold waiting for more data, waiting for NVIDIA, Jackson Hole, waiting for clarity on this blockade, this economic blockade that they're putting into place, and how it's going to affect the proxies like China. There's a whole lot of things the market's looking for and waiting on. And so this 1 o'clock news could be like a little snowball rolling off the top of a snowy mountain, and it could pick up a lot more snow and become a bigger problem as it rolls down the hill. With crude down, that's going to help us out a little bit. It's not a rally factor by itself. It's just less headwind, right? So if crude pulls back, it makes it easier for the possibility of an S&P and a NASDAQ rally. That's the way that you want to look at it. Not that the crude falling down is some fuel source that's going to cause us a rally. That would be taking it out of context. We did start to see a rotation yesterday between the software and hardware, chips getting that rebound, money rotating again. We've been talking about watching the Fed curve, the projected Fed curve. And the ones you really want to keep your eye on is October and December. December is where the first hike is really priced in. And what we want to be looking for is that they start pulling that forward into the October FOMC meeting. What you would see is this far column going down and the middle column rising up. You can see that down below, 375 to 400. It's right here. If this number begins to increase, like it has over the last week in a minor amount, then that's what you want to be mindful of. And as it's increasing, which one is decreasing? If it's decreasing this one, that's okay, because nobody expects that big of a hike. But if they're also increasing this first one, then that's not good. It's suggesting that they're unwinding the probability of a pause and pricing in that hike. There's 10% free at the moment, right? If you consider this far dated one. Yeah, that's not what we wanted. My shortcut keys ain't so short no more. We consider this one being the issue. It's like a free 10%. We know we're not going to get 2. So that can get put into one of these columns. Yellow's not really the color for this, but whatever. What would really remove a lot of doubt and ambiguity would be if they priced it into this first one, right? Just send that up to 55 right off the bat. That would give it a jump above this. That would just be a how do they say it? A gesture of goodwill. But we still need to unwind this 45%, get the market's focus away from the idea that we could hike as soon as October. What would help the markets even more is if we begin to unwind December and start pushing that out to January rather than unwinding December and pulling it forward into October. So you don't have to sit staring at these all day. Just drop by once or twice a day, especially after big headlines, see if the numbers are moving. These things can really move in a single day. The minor fluctuations of a couple of points up or down isn't really that big of a deal. It's the swift rate of change that we really want to be mindful of. Just keep your eye on it. You can see the VIX still holding out down here around $16. Historically, $19 is kind of the line in the sand, but long before we get to 19, the market will start recognizing that there's risk. If we're still hanging out around these lows, then the market isn't really too concerned with a little bit of up and a little bit of down in the VIX. Today we've got that sort of same backdrop with chips up along with pot stocks and uranium, Bitcoin, bonds, solar. You don't want a rally day on solar stocks and pot stocks. It's not sustainable. All right, we got a low score coming out of the White House at the moment. Of course, if that number changes through the day, I'll let you guys know. We can see at the moment most of these events are either closed to the press or it's just the typical in-town press pool. Nothing really stands out as a significant event this morning, but that can change. Keep our eye on it. So we had a bit of a rally last night. We broke completely out of Monday's range, including the Sunday night Globex Open. Ran into the 10, wasn't able to get through it, and really, we wasn't able to get through Friday's level. We do have a spot gamma combo level or a high gamma level, this 7716. That's going to be a difficult level to get through. And if we get through that, we're still a long ways off, right? You got the call wall, 7911 cog line way up there. And there's no reason to think that that's even in play, right? Take a look at the daily. Mentioned this the other day. We've got a possible TRB setup if we start to make the move to the upside, which is a big if all on its own. The TRB is really just a discussion about how we get back to the top, not if we're going to get back to the top. If we can make this move in a single shot and in one day, then that would be a TRB. Otherwise, if it takes 3, 4, 5 candles to make our way back up, then it's more of a scoop pattern or a cup and not a TRB. But we're still hanging out down here at the lows. If we count this big red bar, we are IX10. But being stuck inside of a big bar isn't something that I consider to be very useful, right? There's no compression, nothing like that. So we want to focus on Friday's bar, that smaller bar there. If today we close inside that level, then we're IX10 and it's a narrower range to focus on. But we have to close inside of Friday's level. We can wick outside of it like we did yesterday. As long as we come back in and close within, then we're IX10 and Friday is what we want to focus on. Because of Thursday's size, it does help to know where the midpoint is. And that's what we're fighting against right now in the pre-market. We hit it yesterday. It was basically Monday's high. And we tried to get through it on Friday. We just wasn't able to keep it. And we came back in again. Every time we get above that 50, we get smacked back down. The 50 is the midpoint of Thursday's trading day. We need to get above that and close above that if we want a chance to continue to push above it and get into that 77.50, which is Thursday's high, and then get that breakout started that can lead us back to previous highs. Level by level, right? $90,000 in the overnight shows they did get in here and participate, which makes sense because, well, we actually went somewhere last night. And it started in the Asian session, really started to pick up before Europe's open. And then once we opened in the London session, that's when we really started to take off. Nice expansion. The pullbacks were a little deeper than I would have liked, but it certainly marched to the upside. But it looks like we got a little too far away from VWAP, and now we've paused, let everything catch up, get through the morning data, likely get into the bell. We want to be mindful that this is likely now our range for the day. A lot like yesterday when I said this week is probably going to be sloppy trash until at least we get NVIDIA's earnings. If you've got things to do on the honey-do list, or you just want to focus on trading something else rather than the indexes, this is probably a good time to do it. It's been a while since we've been able to say this, but if we get to one side early enough in the day, we can go to the other side by the end of the day, and that is close enough. So we reached 77.11 cog line, Friday's high. Now that we've done that, we can go to the other side by the end of today. That wouldn't necessarily be all that bearish. If you consider a market that's making its move to the downside, we don't want a market that just falls straight down. That'll scare people, jack the VIX up, cause a panic, get that flight to safety. We need a market that's more calm, stable, and that implies we're going to get pullbacks, measured moves. Take the distance of this move and the distance of this pullback, measure it at the next level and the next pullback, and you can gauge whether the move is accelerating, picking up speed, or if the move is slowing down, losing speed. Same with the pullback, how aggressive the participants are. When people take profit, how quickly is new participants stepping in to take their place. It is worth noting, after we got to the ADR half and we pulled back, we didn't keep going. We've paused. Now, I've seen this before, and what can happen is we get there, we pull back, and rather than just starting to work our way down to the other side, the other ADR, instead we pull back and we kind of just get stuck up here, and we end up splitting the Globex in half and then staying in the upper half of that Globex range. That's what I would be mindful of at the moment. We've got our ceiling, our midpoint, and the low, so it just needs to demonstrate what we're going to get. Any new highs offered opens the door to 77.50 and the full ADR. Today's floor pivot is lower than yesterday. That's bearish. Price opened underneath it. That's also bearish. The channel's a little wider today than yesterday, but both of these are considered relatively narrow channels compared to something that looks like that, right? That was a pretty wide channel. A narrow channel implies if we break out that it can stick and we can keep the breakout. We really didn't get a chance to test that theory yesterday. We got outside, but just for a very brief moment, and we came back in again. Just remember, these channels won't make us break out, and even if we do get a breakout, it won't help us stay broke out. It's just giving us insight into what's more likely if we did get a breakout. If we continue the move to the upside, we got the weekly expected move, which we'll get to in a little bit. We've also got the weekly pivot. This weekly pivot channel is where we're at right now, 77.05. So if we keep driving to the upside, we're going to have to deal with this weekly pivot. And as long as we're below it, we're considered to be in a mildly bearish backdrop. We get above it, then we'd be mildly bullish as a posture or as a context. But we're still below it. So we're still in a relatively bearish backdrop. We made it past R1 and we kept going. Even after we got above it, we fell back down below it and we got back above it again. It does show a lot of strength to be able to do that. Just getting above it is a significant, impressive operation. The fact that we was able to get there, give it away, and then get back up in there again shows they're in there participating and they're putting their money where their mouth is. The concern right now is that we're going to end up with a lower high and then a new lower low and break down back to the daily floor pivot. R2 is really close to the weekly pivot. So if we continue that run to the upside, we'll be fighting both of them basically. I think it would take a heck of a headline to get something like that done. I don't think we can just get it done on our own. The cumulative volume index shows that they're still just hanging out. That makes sense. Why would they radically alter their position in front of this big data? They knew the data was coming, right? It's not like NVIDIA's earnings snuck up on us. We knew Jackson Hole was coming. So they positioned themselves to be exactly like this right now. And they don't have any reason to make big changes until they get new data. It's not a surprise. This is just validating for us that they haven't made any significant changes and they're just waiting like the rest of us. So far on the week, we've got a classic distribution, although we've left that behind this morning with the run back up. And we've only got one day so far, so there's not really a lot to read out here. If we continue moving to the upside, last week's point of control, 77.25, is this week's weekly floor pivot, and it's today's R2, and I think it's also the ADR half, right? We'd have to go back and look at it again, but there's a whole lot of stuff right here at this 77.20 area, and it's not a single line in the sand either, right? It's an entire zone spanning 8 to 10 points. So if we continue this push up, we're going to hit a lot of stuff up here. I'm not saying that we can't get through it, just, oh boy, we're going to need like all-wheel drive, right? We're going to get through this mud. we're going to need some help. Headlines, shock and awe, macro trigger, something that we don't have on the calendar right now. And why would they front run NVIDIA's earnings, pushing a lot of money into the market before they know how things are going to turn out? Why would they, right? Taking all that risk for no reason. 10-day, 30-minute volume profile in TPO. This is what trash looks like. I used to just point to pictures of my ex, but that's pretty good there too. That is what trash looks like. So if you're trying to read a profile and this is what you come up with, there's nothing here. Just acknowledge that, sometimes the tools don't give us a clear picture, and then just move on. Multiple distributions broken up, scattered all over the place. This is not helpful. It's not useful. Oh, you caught that, huh? Good morning, Miranda. I didn't say that. Did I say that? 5-day, 5-minute. Yesterday's point of control already run through, so no new VPOC. This morning's distribution, we've got everything down at the bottom because we spent the most time in that area. And really that's all we got, right? Don't really have much outside of that. We started out with a relatively decent small distribution in the Asian session, right? When they were down here. And if we had just run cleanly up, then we would have ended up with that lower case B shape distribution with a point of control down there. But we didn't. We had a lot of effort to put in all the way up. You can see they've really been getting into it all night. So it wasn't a thin tail, one time framing kind of thing. It's just been effort all night. Not a lot to work with at this point. We got this sort of imaginary zone around my 10-day, a 0.5% above, 0.5% below. And when we're in this zone, the pace of the tape is different. The way that they trade the S&P, the SPX is different. The trade sizes are smaller. The time between trades is bigger. They're not hitting the pace as fast. It's just a slower, calmer, more deliberate activity, right? And it's a calm in the center of a storm. When we're in this space, it's not dangerous. It's not bullish. It's not bearish. We're just taking a break, giving the market space to call time out while it waits on data. It's not a bad place to be. There's no mean reversion drag at this spot, right? So it doesn't owe us anything. It's not overbought, not oversold, not overextended. It's just chill. Take a look at the weekly, and we're still above the 10-week. It's a good place to be. It's where we generally hang out. And as long as we're hanging out above the 10 and we're not, quote, too close to it, then we won't get sucked into it like gravity, right? Just hanging out like a satellite. So we want to continue to keep our distance from the 10-week. Don't want to get too close. 1.25 is perfect. We get down below that 0.5%. If we get below 1%, we could start to drift closer to that 10-week. Once we start doing that, the likelihood of us going down there and making contact with it increases. The weekly expected move right now, kind of a long ways off. And so far, I think we've done a pretty good job of defining our range for the week. This is likely all we're going to get until NVIDIA reports. 77.14 on the upside, 76, probably 76.58 or something like that. 76.55 on the downside. Now, don't get me wrong, we can wick out of this little box that I drew, but I'm not expecting to close outside of this box before we see NVIDIA report tomorrow. Having said that, it's a thinner market right now, and the lack of participants means it doesn't take as much to move price. So I'll warn again, there is a thing called a grind day where we just go and go and go. One of the reasons I keep bringing it up is we haven't had one in a while. Another reason is we're set up for a TRB. That idea that we can make it back to the previous high in one bar kind of goes with that grind logic where we just keep going and going with no reason why and no macro trigger headlines, nothing. It just keeps going. And that would get us right back up to the top. And the more people try to short it, the more they just add fuel to it. We trap those bears and squeeze them until they buy to close, which adds to the buying and fuels it more and drags us back up. I don't know that we're going to get one. And we shouldn't, right? We shouldn't see that move. We shouldn't get out of this box before NVIDIA's earnings. But if I'm looking for one, that's what I would be looking for. That or some kind of headline, right? Something out of the Middle East, something to do with this global energy crisis. You know what I mean? It's something. It's going to have to be shocking. And if we can't think of something shocking, then a silent grind, forced buying that gets us back up there, that makes sense. Just what's going to be what's the why behind it? I don't have one. Looking at what's down this morning, energy is down. Nat gas, uh, gold miners, junior miners, software is down, just not enough. So we can kind of keep our eye on those, but we're not really expecting to see it turn around. And those being down, none of these sectors being down is really going to help us out, except for maybe crude. It just takes that headwind away, doesn't provide any tailwind. The tailwind is going to come from one of these, whatever's up this morning that could help fuel a rally. Chips being up, SMH, that can help fuel a rally, but by itself, it's not going to get it done. We have some risky assets that are up. It's good to see those, like robots, uranium. IPO is another real good one for a risk-on tail. And in yesterday's trading, we saw a lot of bullish options trading yesterday, but not in the indexes, right? We had some serious dispersion going on. It's possible we're going to see that again today, especially with what we have lit up this morning. So, it kind of goes back to what I was saying earlier. If you want really good trades over the next few days while we're waiting on NVIDIA, probably don't want to look at the S&P and the NASDAQ. Probably want to go look at something else. It will most likely provide a better trading opportunity. That is certainly what we saw yesterday. It's likely what we're going to see today. These are some really good signals between the MAG 7, IPO, UFO, robots, airlines, chips. We got some good stuff up this morning. But it's not likely going to move the indexes. It's just going to be like a dispersion play. So we've got our range. This is very likely going to be our home until NVIDIA reports. We could wick out of it and then come back in, get that 111 reversal, or possibly a 1, 2, 3, 6. If we break out without a reversal, I would be mindful that it could be that forced grind, that forced buying day where we just go with no rhyme or reason or headline. And on those days, you don't try to call the top or play the reversal because there is no reversal. It just keeps going and going and going until it eventually stalls out around 3:30. And I mean stalls out, not falls back down. It just ends at the high of the day. I'm not expecting it. I'm just bringing it up because we're kind of due. If the high is in for the day, then we want to focus on coming back down to the midpoint and just maintaining our Globex sideways range, hanging out inside of yesterday's range, going into the close. If you liked yesterday's trading, well, then you'll love today. That's what I got for you guys. Be careful, be safe, watch the clock. Don't forget we got that auction today in the front end. It's the 2-year at 1 o'clock. Y'all be careful. I'll see you tomorrow.